Hello everyone. I'm Nandi, the Senior Marketing Manager at Capify. We are an alternative small business lender who offer a variety of finance solutions. Firstly, I'd like to welcome you all and thank you for joining us. I hope you've all been staying safe and as sane as possible given the current situation we're all in. Secondly, I would like to welcome and also thank George Coletti, the Director of Access Professionals, who kindly volunteered to assist us with this webinar. So, George.
Hi guys, good morning.
George has over 30 years of experience in both public practice and commercial accounting and has proactively worked with his clients in all manner of industry sizes and profiles, assisting them in managing and growing their business whilst maintaining compliance and governance, high levels of those as well. So today, George and his business partner, Michael, run Access Professionals with a team of 8, delivering customised services to hundreds of clients. So with his experience and understanding of both taxation and commercial issues, we feel that he brings the right level of expertise to be presenting what benefits are actually offered to small business owners. He also happens to be my husband's business accountant, so I can personally vouch for George's proficiency. Now, I think I voice everyone's sentiments when I say that the impact of coronavirus on a lot of Aussie businesses has been truly devastating. And whilst our government is doing their best to assist businesses across Australia, any additional help and support that we can actually give each other during this time would not go amiss. So we're super grateful that George has joined us today to break down the various packages and help us understand what's actually available, who is eligible for what package, and also what's actually required for you to get the application process started. Now, before handing over to George, I just wanted to give you all a quick overview of the agenda for today. There are several COVID support packages announced by the government for individuals, households, businesses, as well as, well, I suppose everyone really in our economy. But our main focus for today is going through the core business component. And what we'll be covering is increasing the instant asset write-off, backing business investment, the JobKeeper payment, boosting cash flow for employers, as well as supporting apprentices and trainees. We'll finish off with a live Q&A session with George. So if you've got any questions as we're going along, please add them into a chat to me directly, and we'll try our best to get through all of them in the time frame that we've actually allocated. If we don't happen to get through all of these questions, we will aim to answer those afterwards. And as mentioned earlier, we'll also include these within an email along with a recording of the webinar, all the FAQs and some additional resources that are going to be handy to you, and email it across to you after everything's finished. I will now pass the virtual mic over to George to get started.
Great, thanks very much, Nandi. And thank you to Capify for putting this together for all of you. I think it is an awesome thing to be able to do that and provide support in an environment which is tenuous at best at the moment for a lot of people. So going through, and Nandi, if you can give me a couple of minutes notice if we're running out of time, just so that I can make sure that I try and stick to the topic.
No worries.
Delivering support for business investments, I suppose one of those things that the government's trying to assist businesses where possible during this time. There's going to be a lot of shutdowns, there's going to be a lot of people going into hibernation, or businesses going into hibernation, and there's going to be some that actually fare quite well. How that is going to happen is dependent upon your approach and what support you actually have to assist you with that. So without further ado, I'll go through some of the incentives that have been available, and obviously these have been made available through various mechanisms. There have been announcements, and up until last night we've only had the first lot of legislation which has actually gone into Parliament. So very little guidance. So we're, as professionals, what we're doing is giving our clients our best guess as to how they're going to be applied. For the most part, we've actually been pretty much right on with what we think that they're going to be doing and how they're going to be implemented. implementing and some of the definitions around what they're going to do. But some of them are actually fairly easy to understand. So the first one is this, the asset write-off. The asset write-off, as most of you probably would know, was $30,000. That's been taken now up to $150,000, and that's up until the 30th of June this year. Who's eligible? Basically, if your turnover is less than $500 million and up to $50 million, you'll be eligible to actually do or use the asset write-off. As far as the what you can expect to receive under the new instant write-off rules, if and at this time we're assuming that it's all in relation to not only new assets but also second-hand assets, you will be able to use that as a write-off. Now that's going to be available from the 12th of March through to 30th of June, and that's when you've got that opportunity to actually invest in business if you've got cash or availability to cash, or you can get some finance from financiers. What is required for this application? This is completely independent on. There is no separate application. You simply make the appropriate claims within your tax return. So all your financial advisors and accountants should be able to assist you in understanding how to apply or use that in your business. As far as backing a business investment, the stimulus introduced a limited 15 months investment incentive. And this is a process where they've said that we're going to try and provide support over a period of time in relation to you investing in your business. That includes not only the asset write-off but also the accelerated depreciation, which they're going to be able to offer you beyond the 30th of June this year. So what that means is if your aggregate turnover is below $500 million and you're purchasing a new asset, it says new asset, that at this stage, we believe has been extended to second-hand assets or used assets as well, provided you're buying them externally and not doing them as an internal transaction. What we expect to receive is effectively 50% deduction immediately on those assets, and that extends to the 30th of June 2021. And what that will mean is that you can actually claim 50% straight up front, and the balance of it will depreciate on the normal write-off rates. Again, no application process. It's purely the way that you actually include these in the tax return. Again, your financial advisors should be able to provide that guidance for you. Some questions that have been posed, and I've got a few answers to assist you. Will you be able to claim it in your 2020 income tax return? The answer is yes. Are you eligible assets that have been purchased prior to the 12th of March? Again, guidance is not 100% clear, but they do say in the legislation that it is when it is installed and ready for or available for use. So if you've purchased it prior to and it's available for use or installed ready for use after the 12th of March, in theory, you should be able to make that claim also. Again, that would be in your own circumstances, so have a chat to your advisors. Are second-hand assets eligible? At this stage, we believe that they are. The legislation hasn't been amended accordingly, but we believe that it will be. Cash flow assistance for employers. This is a bit of a minefield, and everybody's asking lots and lots of questions about what assistance is provided. So boosting cash flow for employers is something that was initially offered in the first stimulus. The government basically had a lower amount that they were originally going to introduce. They've now increased it or doubled that amount that they've offered. So what that means is that as far as cash flow for business, you can receive an amount that is equivalent to the payments that you're actually making the PAYG withholdings for the periods of March quarter and also the June quarter. So what that means is the minimum that you're going to receive would be $10,000, and the maximum payment for the first part of the stimulus is $50,000. Who is eligible? Effectively, if you're a business and you've got a turnover of under $50 million, you are eligible for this, and also that you've got employees. Make sure that your activity statements are also lodged, otherwise you will find that you may not be eligible for this, so you'll need to make sure that you're up to date on lodgement of your ASIS. How much can you expect? Well, what it basically is it's all hinged around the PAYG withholdings that you actually make. The amount that you'll be receiving is depending upon, and I've actually got a little cash flow which I'll provide for you guys later, or Nandy will actually provide it for you if you need it. It's in one of our emails that actually shows you the cash flow out. $10,000 is the absolute minimum. So if your PAYG withholdings for the period of March were less than $10,000, you'll still receive $10,000. And then for the next quarter, depending on how much they are, you'll receive the equivalent amount, but up to the limit of $50,000 for both quarters. The additional payment, which was actually introduced in the stimulus as well, will apply from the June quarter and the September quarter, and that is based on the amounts that you received in the first stimulus for the first 2 quarters. So a little bit confusing, but the cash flow that we've got actually will show you a very simple explanation of that. Again, with regard to applications for this particular stimulus, there is none. This is purely based on what you actually lodge in your BASs. So no formal application is going to be required for that. Some questions that are being posed are, can I increase my employee wage to take into consideration the cash flow boost? Short answer is there will be anti-avoidance provisions. There's going to be some flexibility that the ATO will effectively apply. We have been advised by the Commissioner that there will be some discretion. However, what that discretion is and whether you're actively seeking to, I suppose, increase payments that you otherwise would not have been able to get, there will be some scrutiny. The only thing we can say is be mindful of that and make sure that you're actually doing the right thing as far as the way that you're applying for the stimulus. Who will be able to claim if I haven't lodged my 2019 tax return? Will I be able to claim? Sorry. The answer is that if your tax return is not due yet, our belief is that there is no reason that you have to lodge it in advance to get that. If you're on a lodgement program with your tax agent, then you may not be required to lodge until May or even June. So you may not have to lodge that in order to get the stimulus, as long as your activity statements, which are definitely required to lodge, are lodged. Again, no clear guidance, but you need to basically seek your advice. How is the initial cash flow boost calculated? It's basically calculated, and there's a long-winded explanation and there's a simple explanation. I'll try and give you the short one where possible. With regard to the way that it's calculated, it's all based on the amount that you're actually paying in PAYG withholdings. So if for instance, you're a high paying, you're paying more than $25,000 a quarter in PAYG withholdings, then effectively you'll get $25,000 for the first quarter and $25,000 for the second quarter. That means that a total amount that you've received is $50,000 in total for that first 2 quarters, which is your first part of your stimulus. Beyond that, you then will receive a further $50,000, in other words, an equivalent 100% of whatever you received in the first part for the second part of the stimulus, which is called the additional payment. And that additional payment will be split into 2. You get 50% on lodgement of your June BAS, and you get 50% on lodgement of your September BAS, so $25,000 per quarter, giving you a total amount, and this is the maximum that you would receive in the stimulus, of $100,000. If you're receiving or a smaller payer, obviously that will change, and there's a cash flow that we can provide that will show you how that will actually work. And I've just answered that second question, which was the second additional cash flow boost. Is there a difference on how much I'll receive if I lodge my BAS monthly versus quarterly? Absolutely. Initially, the way that it calculates is, and there's somewhat conjecture as to whether this provides an advantage to anybody. However, because if you're a monthly lodger, you would have already lodged your January and your February activity statements explaining how much you've actually earned. So in that instance, if you're a monthly lodger, it will be 3 times the PAYG amount, PAYG withholding that you've actually had for the March quarter to calculate your first part of your stimulus. So effectively, that is how the first payment will be made. So if, for instance, you have an amount of you know, $15,000, for instance, that you've actually paid in the March month for your PAYG withholdings, multiplied by 4, you will actually get the maximum of $25,000. Now, will it be taxed? The short answer is it is a tax-free payment. So it will not be taxed as opposed to the other stimulus, which I'll talk about later. So we don't have a lot to do with many apprentices. However, there is a lot of guidance through the apprenticeship board. There is an institution that will actually provide you with information, and I think I've provided that as a fact sheet for Mandy to give to anybody who needs it. There is incentives for people who are employed apprentices, and that is an amount of $20,000 if you're an eligible apprentice. There is some guidance as to how to calculate that and what it is, but if you've got some questions on that one, feel free to look at the clarification within the scope of your business, and also the guidance that the ATO has provided, or the government has provided, I should say. How much can you expect to receive? Well, the amount is $21,000. That is how much you'll likely get for each eligible trainee. The application process. There is an application process for this, and it will be eligible, you'll be eligible to claim that up until the 31st of December of this year. What happens if you let go of an apprentice or trainee? If there is some transmission of employment issues, so if you actually let go of one and they go to another employer, they will be entitled to, the new employer will be entitled to that payment. There is some additional guidance on that which we're waiting for in relation to that. Is there a cutoff? Yes, there is a cutoff for the subsidy. It will be 31st of December. Probably one that's more pertinent to everybody is the difference between the JobKeeper and JobSeeker. We'll talk about the JobKeeper payment initially because that's the one that most businesses are looking at the moment. The government has provided a $130 billion subsidy program for this. So it is something that's actually quite significant and never done unprecedented in our history, certainly for the government to get so much money out to so many people. Who is eligible? If your business has a turnover of less than $1 billion, and if that turnover has significantly been impacted, you've had a 30% reduction if you're under $1 billion and a 50% reduction if you're over $1 billion, and there's been some recent changes to if you're a charity, that's 15%, then you'll be eligible effectively to make a claim for the JobKeeper payments. How much can be expected to receive? Well, you can expect to receive $1,500 per fortnight for any eligible employees. Effectively works out at $750 a week that you'll need to pay your employees, and you will actually receive that that cash boost back from the government. What is required to proceed with the application? We've advised all of our clients, and as probably most of you have been advised as well, to register on the ATO's website. It's a very simple process. You just need a few details, including your ABN, and you make that application and or express interest in making that application to the ATO. They will then contact you and provide you with some information, which we've already been getting to some of our clients already. So there is definite guidance from the ATO, and they will be there to assist all of you. If you have any questions on that, make sure that you know that with regard to employees, they will receive their $1,500, and then we'll make sure you get that back. It is, and this is a question that's been asked from various people at the moment, with regard to the stimulus for this JobKeeper payment. If you're paying, for instance, the employee less than that $1,500 per fortnight, then you'll pay them the $1,500 per fortnight, and the supplement will take up the difference. Some questions. Can I still claim the JobKeeper payment if I'm self-employed? The short answer is yes. There's been some guidance now that with regard to the payment, that if you're a director of a company, a beneficiary of a trust, and you're a partner in a partnership, or a sole trader, you will be able to make that application. All the other criteria will still apply, but you can definitely make that application, and each will be considered on a case-by-case basis. How can I establish that my business has faced either a 30% or a 50% fall in turnover? Really good question, and one that's actually posed various arguments here at our office, that's for sure. There is very little so far as guidance on this, because we've had, most people weren't affected until March anyway. So if they look at the original application as to how it was going to apply, it was look at the previous quarter comparative period in the previous year. And that may be very different for everybody, because you may have just started your business, you may have increased your business from now until then. A significant drop in revenue may not have been seen for that period. However, the previous quarter might have been very different. And if you're a seasonal taxpayer, you've got very seasonal revenue and lumpy income, it may be that you're affected in a different way as well. We're expecting further guidance to come through on that. And again, we've been advised by the ATO that the Commissioner has the discretion to review cases on a case-by-case basis. So we're hoping that in the legislation, which we're yet to review, we're actually going to be reading that today, that quite possibly there'll be some definitions there of what is significantly impacted by COVID-19, and give us a bit more guidance as to how we're going to be applying this. I can tell you now, for a lot of our clients, we'll be pretty much finding lots of reasons as to why they've been significantly impacted. So, try and be a little bit wider as far as the application goes when you're looking at it for yourselves. Superannuation payments. Do you have to pay superannuation payments on the JobKeeper payments? Effectively, if you're paying an employee anyway, and let's just say, for instance, that you're paying $500 per week and not $750 per week. If you've made the application for the JobKeeper payment, in which case you'll be paying them $750 per week, the $250 additional that you're paying them out of your supplement, you do not have to pay superannuation on, so it's not subject to SGC. So you only have to pay up to your original $500 amount, and therefore the additional $250 is not subject to SGC, so you don't have to pay super on that. Some employers have advised us that they're probably going to do that anyway, just to help their employees out. However, there is no obligation. Can the business apply themselves to go through their accountant? The short answer is I would be going and making the application regardless on the ATO's website. And you can seek guidance from your accountants. At another point, if you're finding it difficult to contact them, there is no reason why you can't make the application. The ATO will have a look at that on your case-by-case basis, regardless, and say you yay or nay, regardless of anything else anyway. So we suggest that you make the application just to help out your advisors as well, because they're probably being inundated with calls. So do that regardless. Okay, Mandy, how did we go for time?
Sorry, just had to unmute myself just then.
Right.
I think we're actually going pretty good for time, George. And I see that we've got a few questions here as well. So firstly, thank you once again for all your valuable insights. Since we're all experiencing such disruptions to our businesses, your breakdown of what schemes are actually going to offer and how businesses can start taking advantage of them is very timely. So that once again brings us to the next part of our webinar, where we're going to go through a live Q&A session. People have started adding some questions within the Q&A section. George, can you just confirm that you're able to see the questions on our Q&A screen, or do I need to send them to you?
No, I've just got them up now, so I can see them.
Okay, lovely. So yeah, if you don't mind, what I'll do actually is the first one I'll get you to answer if you don't mind.
Yep.
We've got one from Ken Spicer from Timber Craftsman. He actually emailed me last night asking, since most of his staff are on contract, will they still qualify for the $1,500 per fortnight wages subsidy?
When you say they're on contract, are they contractors or are they employees in either a casual or part-time capacity? That's the question. I'll answer it in both ways for you. If they're contractors and they're effectively a true contractor and not an employee, we don't believe that they're going to be eligible, but they themselves, if they're contractors and have a business, presumably they have an ABN and they've registered their own business, they will be able to apply themselves. If they're a part-time or casual employee, then you'd have to look at that as to how long they've been employed and on what basis, and they would be eligible if that's the case.
Thank you for that. I hope that was a sufficient answer for Ken. If you want to go through and select some of the other questions on our Q&A panel, and we can start answering them, George, that'd be great.
Okay, I'll look at the earlier one. So new business startup. Okay. Yeah, we too have got a couple of clients who are new business startups, and that is the question that we're posing at the moment. We're advising them to make the application. Unfortunately, they don't meet a lot of the criteria. However, this is one of those ones that they're on a case-by-case basis. They're basically committed to themselves to start a business. They've done all the right things, got an ABN, registered for PAYG, done all the things necessary. Will they be eligible? We think that they should actually be making the application, and we're going to be fighting for that as well. So the short answer is make the application and see how we go. Second question I've got here is, how does government confirm your income has fallen by 30%? That's from Peter. Peter, it's good question. Sometimes you, and this is what we've found, it's not necessarily just the income that's fallen, it's how significantly you've been impacted. If you've had a business that's been growing significantly over the last 2 years, and your income from the previous March quarter was fairly low, and all of a sudden, you've been able to double and triple that over the next several quarters, it seems a bit unfair that you've geared your business up for a fairly significant revenue, and all of a sudden you miss out on that criteria purely because your revenue is not 30% lower. What constitutes significantly impacted, again, is one of those things that we're going to be looking at on a case-by-case basis. Is it necessarily just revenue, or is it significantly impacted in other ways? And you might have to look at it by different mechanisms or analysis of your business. Our suggestion is to have a chat to your advisor about that, because you may have to be a little bit more creative on the way that you actually apply that tool, and at least discuss that with the ATO. They will be open to discussion, and they certainly will be listening to people as far as what they believe the impact will be. If you're looking at it purely on a revenue basis or an income revenue basis, it's going to be fairly straightforward. Maybe even average it for the last 12 months and see if your average for the quarter is actually going to be lower, and potentially look at it that way. We've done a bit of modelling here for some clients. Michael, my partner, is actually extremely good at modelling things, and he cuts and pastes lots of different ways of doing things. So various ways provide different results, whether you're averaging it, whether you're looking at the previous quarter, whether you're looking at the previous 12-month quarter as a comparative. You'll need to basically look at various options for yourself and customise it for the way that your business actually works. Be reasonable, talk to the ATO and see how you go. Did you want to pick one, Mandy?
Cool. So there's one here about how can you pay that $1,500 when you have zero income? How would that work?
Yeah, that's a really, really good question, which we get quite a bit at the moment. The idea of actually paying $1,500 and then not going to be receiving anything until May, and that's when we've been advised that these payments for JobKeeper will start to flow, is going to be May. Businesses who have not prepared their cash flow early on to be able to handle this may find that it's actually really difficult to actually make those payments. We have had one client saying that they really do want to make these payments to their staff, but they don't have the cash. So they've committed to their staff that as soon as the cash is available, they're going to provide that for them. that's potentially maybe one way of being able to achieve that same result. But as far as how to actually plan for it, what we've told our clients initially is have a look at the cash flow now, how it's structured, see what payments you can defer or put aside for the time being in order to meet some of the obligations you're going to have. You have to be also fairly certain that you're going to be within the guidelines to be able to receive the payment, because you don't want to all of a sudden make the payments and then realise that you're not actually eligible to make those payments, and then you pay them out of your own pocket anyway. Other than the employees benefiting, you may find that you may be short of cash flow and effectively struggle cash flow wise later because you've paid things that you otherwise couldn't. What else, man?
Thanks for that, George. Another one with regards to that JobKeeper payment. We've got Trisha who's asked, as a director, if I receive a monthly salary, will I qualify for the JobKeeper payment?
Trisha, the short answer is yes. We have actually had some recent guidance on and reading through some of the paraphernalia the ATO and also the government has issued. They have now made it available to directors who are receiving, for instance, directors' fees. You may not have been a salary and wage employee from the point of view of the normal employees, but if you're a director or if you're a shareholder even for the company and you otherwise can receive dividends, as long as you nominate, and this is the issue, you've got to nominate one person effectively to receive the JobKeeper payment, whether it be a beneficiary of the trust, you need to nominate one beneficiary, whether it be a shareholder of the company, you need to nominate one shareholder, or a director of the company, and you potentially will be able to make that application.
Cool. We've got another one from Fiona Curdy who has asked, who is an eligible employee? So do they have to be stood down, have a reduction in wages, or can they be on their full wages? What do they have to have that loss in wages, basically?
Okay. Well, as far as a loss in wages goes, it doesn't necessarily mean that you're paying them less or paying them more. If, for instance, you've been you meet all the other eligibility criteria as an eligible employer, and the employee meets all the eligibility criteria as an employee, if you're paying them, for instance, let's just say that an employee is receiving $3,000 per fortnight as a part of their normal wage, then if they're eligible, you'll receive $1,500 per fortnight for them as a job payment regardless. So you're only supplementing them for the difference. If they're under that threshold, then you'll be able to receive the amount up to the $1,500. And if you've effectively stood them down and they're not working, you will still receive $1,500 for them if they're eligible.
Thank you. And then we have another one from Christine Johns, and she's asked, can I claim a loss of cancelled bookings from clients due to COVID-19?
Cancelled bookings, as far as a loss is concerned, if you're not reporting the income, then there's no point in, you're not going to be claiming a loss. Effectively, all that's happened is you've had bookings, you haven't received that income yet, therefore you've actually not made a loss. You've effectively not actually provided the service. So the short answer is you can't claim a deduction for something that you haven't actually received. As far as your criteria goes, though, that will effectively mean that if you've got cancelled bookings, that means your revenue will be down, and therefore you'll meet the eligibility criteria of the loss of revenue. So you need to take that into consideration and make your application for the various stimulus as best as you possibly can, because that is a significant impact. We've had, a client as an example who is an event coordinator. Their bookings have gone from 50 odd bookings over the next 18 months to 0. They had everyone cancel their bookings. So their potential revenue, may have been $350,000 to $400,000, and their now potential revenue is 0. So effectively, you've got a business structure with no foreseeable revenue in sight. What are they going to do? Well, we're working out how we can hibernate them for the time being. That's the decision process that you have to make.
There's a few more questions on the Q&A section. George, did you want to go through and pick?
Yeah, happy to pick a couple. Okay, there's one question here which is interesting from Saman. Is a business allowed to settle business loans using government grants or support package? You've got to look at the way that they're being received. The initial PAYG withholding stimulus, which is basically being provided, is provided through the GAZs. So it's not necessarily an additional cash flow other than the additional payment that you'll be receiving. If you're going to be using that toward paying off debts, you've got to take into consideration that if you're settling other debts as opposed to paying employees or employee entitlements, that may not necessarily be a really smart thing to do. So depending on which part you're receiving the stimulus is how you would want to be applying that. As far as if you're entitled to other incentives or the potential new loans that may be made available, where you can get a cheap amount of finance to support your business during a period of time, there's no reason why you can't use that to effectively pay loans. But be mindful of what you're receiving the incentives for and where you're going to be applying them so that you don't leave yourself short on employee entitlement. Another question that might be interesting. Okay, here's one from Michael. I run a psychotherapy and counselling practice, but now need to operate my practice at home. Are there any incentives for business owners now operating from home and online? Actually, I was talking to Michael, my business partner, this morning about that. He was analysing the new rate that the ATO provided us for home office use. Prior to, well, in the current year, it was actually at 51 cents per hour. That's now gone up to 80 cents per hour. Now that means that if you're operating or working from home, effectively, you can actually pay 80 cents per hour, which includes, your home phone, internet, and your light, power, and other usage. What you need to consider, though, is previously, if you're running your business from home, you were claiming, the set rate for instance, things like light and power and heating, which was the 51 cents per hour, and then you can also claim in over and above that any other usage, such as your internet, your phones, and other resources that you'll be using at home. So the question would be is you would need to look at that on a case-by-case basis and see which one's going to give you potentially a better result, and you would apply the one that's going to give you the best result, whether you claim the higher rate and don't worry about the others, or whether you actually use the lower rate and then claim your home phone, home internet, your mobile phone, all the other resources that you're going to be using at home, other than light, heating, and power, which effectively is going to be claimed using one of the rates. The other question, back on that same question, in relation to that, there's also a distinction that the ATO makes on whether you're actually conducting a place of business or whether it is a home office. There are certain also CGT implications on the two distinctions as well. So be mindful of that and have a chat to your advisor as to which one you should be claiming. If you're a place of business, effectively you could be subject to capital gains if you ever sell your home for that portion that you're actually using. We've got some clients who will actually claim, for instance, if they've got 15% of their home effectively is a place of business for them, then 15% of, for instance, their rent or mortgage payments, or mortgage interest, I should say, may be claimable. So be mindful of the two and talk to your advisor as to which one you want to apply. You got any that you'd like there, Mandy?
So I think, we've got obviously a fair bit of questions on here, but I don't think we'll have...
we might run out of time before we run out of questions, that's for sure.
So I might just cut it off there, only because we've got a fair bit, so I'm just like, not sure which ones we can and can't answer. So
yeah, for sure.
unfortunately, yeah, that's all we have time for. So if anyone else needs any further clarification on anything, we'll obviously send you out some resources, but we would also recommend that you actually get in touch with your accountant and your financial advisor to take you through all of this. George, on behalf of Capify and also all our attendees, I would like to thank you once again for delivering, a comprehensive breakdown on such a complex topic. We appreciate the time and effort that you've taken to share your thoughts and your expertise, and believe that we'll all be able to benefit from the knowledge that you've imparted today. To everyone else, thank you. And to everyone else who joined us today, thank you so much for attending and your attention. We hope that this has been informative and useful session for you all. And hopefully you have a little bit more clarity around your next steps. Capify are committed to continue providing you support and support for the small business community wherever we can. So please visit our website for any more information, as well as updates on how you can keep your business moving during these difficult times. Thank you, everyone. As a reminder, we will be sending a recording of the webinar, the FAQs and the additional questions that have been asked and answered, and the resources. So keep an eye on your inbox, and if there's any further questions or if you need anything, just shoot me across an email and I'll be more than happy to help. Thank you so much. Take care and keep safe, guys. Cheers. Thank you.